Good morning, traders. It is Thursday, March the 5th. Taking a look at the charts, the markets continue to do this yo-yo action where we get a huge rally, a 4 or 5% rally, a couple percent pullback. Yesterday, another big rally, and today we're down about 2% again in pre-market. Overall, it is trying to grind its way higher, but keep in mind the trend is down, and while price is moving higher, volume is dissipating, meaning there's fewer and fewer buyers up here, and there's very good potential we could see the market pull back and do a little bit more of a double dip potential test. And obviously, stocks are selling down this morning, and we're starting to see some money just rotate a little bit into the safe havens. If we take a look at bonds opened much lower this morning, below the 5-day, but back above the 5-day moving average. And if we just zoom out to this price action, we are into this type of this kind of area, I think, in the market right here, where this high volatility in the market is kind of in play, and I think the move is mostly done. We've got the big volume surge, just like we've seen in the past. Volatility, we're seeing huge intraday swings on bonds, just like we saw back over here. Good news came out for bonds, rates being cut, dropped, and that usually when the news comes out, it's pretty much the end. So what we're looking for now is a push up to nominal new highs from here. Hopefully we'll see it go up, hit our first target, and then I think we'll get into some choppy water and see some type of a pullback with bonds going forward. So that's kind of where we are in terms of, I think, the bond cycle. And of course, if we can break this previous high over the next couple sessions a little bit higher, that'll hit our target. Or if we get up to this previous high, again, we might just exit our play for about a 14.5% gain and let the markets do its thing. We're getting close to a potential buy signal in equities. If they can continue to move higher and hold their ground, we could start to get into a short-term trend reversal, but overall this feels and looks like it's going to be pretty choppy for a while. This is a pretty big range right here at this point, very similar to this type of range we saw over here. So this could play out for a little while and be pretty choppy in the markets. Now let's take a look over at gold, silver. Gold up 0.5% this morning. Silver is up 0.5%. Overall, we had that margin call kind of day where everything got clobbered. Everybody got forced out of their positions and created this big wave of selling. Of course, that move has popped back up. We're back to where before that day was, and we're trading sideways in this range. Overall, gold's still holding up in this big bull market, this big uptrend. If we look over at silver, silver hasn't fully broken out yet. It's still trading much lower, and in the grand scheme of things, it hasn't broken out of this big bull flag. It's got a lot of work to do before it does that. Looking at GDXJ, gold miners, same with GDX, the larger caps. Overall, a lot of damage done to the chart. It's bouncing back up. We're stuck under some moving averages and through this consolidation period. Overall, we got some big volatility in price here, and it still may take some time for the markets to kind of work themselves out. More or less, this was a nice pattern that we saw forming, nice bull flag, pulled back. It started to break out of this pattern with a series of bull flags and started to break out, but got quickly rejected in a huge way. And now we're back down to, we've got a higher high, we've got more or less a lower low, we've got a broadening formation, and it's just an ugly chart now. This really did a lot of damage, and we'll see how the market can start to build some type of new base, new launch pad. But a new high and a new low goes to show there's a lot of volatility in here. There's still big sellers lurking. When the price gets up to this area, we start to see big selling step in, and that's where we are now. We're still struggling for the gold miners to actually break into a bull market. Technically, they're not there yet. They're very close, but they just haven't seemed to be able to do that. Looking over at energies, natural gas down 0.1%, nothing too significant. It's back to the 20-day moving average and more or less at a pretty critical resistance area. If we look at just draw a line across this chart, you can see the price right across this area. Pretty significant pivot zone. We had a pivot low here. We had a lot of consolidation through here, so there's a lot of volume there. And of course, we had a high here, and then the market gapped above it, popped, started to run, and got rejected. We had more volume here, and now we're back into this area where it's tagged 3 times. It's at resistance. We have the 20-day moving average moving down, and this could start to get, I think we're very close to a bottom in natural gas, but it obviously we haven't flipped to the upside yet. We're still making, now we're making some lower lows. We did make a higher high from here to here, and we had some good momentum, but it failed, and now we are back down to still making lower highs and lower lows. This could build a base or potentially break to the upside and build a bigger base across here. But overall, we're going to let it continue to do its thing and get some upward momentum. At this point, it's still trending lower. Crude up 0.5% this morning. Had a nice bounce off this longer term support zone. If we go back in time, here is his previous low, came all the way down, hit that low, had an oversold knee-jerk reaction bounce, very precipitous type of fall where it started to pick up more and more speed, hit a major support zone, and is bouncing. It's trying to form a little bit of a bull flag. We are above this 5-day moving average, this blue line here. So it's got a little mini bull flag. The trend is still down, but we could very easily see the energy sector have a bounce to the upside. We could see it potentially pop up here. This measured move, you've got here, a measured move up towards this 20-day moving average, which is also through the heart of this consolidation. And from there, it could potentially continue to go lower. But much like natural gas, it will be looking for some potential base to be formed for it to have a rally. This is a very significant low, but again, at this point, it's just a bounce, and we could easily come right back down and test these lows and potentially break them and head down to the low 30s after that. Last but not least, take a look at the utility sector, which is seen as a safe haven play. They were outperforming. They were the leaders for the year, and obviously a big wave of selling hit got them forced to sell off. We've seen yesterday was a big day. Really, they've recovered a huge chunk of their losses. Money continues to flow into these as a safe haven play. Utilities are very defensive, dividend paying. No matter what happens, we're still going to need running water, electricity, all those things. So money is piling back into those that defensive sector, and that's what we've been talking about back over here, is how metals and utilities have been leading the way. And obviously, other than this quick correction, this little kind of crash, they're still leading the way for the overall financial markets, and that's a sign that we're usually a couple months away from potentially a bear market in equities, and I wouldn't be surprised if we see them continue to work themselves higher. But overall, huge volatility, big 5% moving days back to back here almost, and I wouldn't be surprised if we see some more big volatility, but money is definitely flowing into this safe kind of defensive asset class at this point. Looking at this is the healthcare. We talked about this one yesterday in the morning. I was trading way down here yesterday, had a huge gap higher, continued to run, strong close. Overall, safe. The healthcare sector, obviously with coronavirus going around everyone, I think the healthcare sector could do really well and really be a focus for people to focus on just health, being clean, and all that. So it's performing very well. I think we could see it start to continue to push higher, much like utilities, and I think it's going to be more of a favored sector for a little while. So overall, we'll look for the first pause and pull back. It could be a good opportunity once the trend and the momentum kicks to the upside. But at this point, there's been a lot of damage done to all these charts. The trends are still down. They're having a V-shaped style recovery, and we're getting close to where a trend could kick into the upside, but we don't want to jump too soon. This is a knee-jerk reaction still. We've got panic sell-off, knee-jerk reaction to the upside, right into pretty much all this resistance here. Could very easily reverse and come back down for some type of double dip. So that's the big risk in the market right now, is a lot of short covering going on, a lot of greed, panic, buying and selling, and it creates volatility in the market across the board, not just this sector, but all asset classes. So we got to be really aware that these are huge moves. You don't want to be sticking your neck out too much when we're having 4 or 5% moving days back to back in different directions. It's very much so like a school of fish of panic and short covering, just going back and forth, and you don't want to get in the way until it consolidates, builds some momentum to the upside, and then we could look for a potential move back higher. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.